G'day guys, welcome back to the Devon Too Good Investing channel. In this video today, we're going to be discussing Tencent stock, and we're going to be delivering a bit of a back of a napkin style valuation, and we're going to talk about some of the risks involved with investing in Tencent, as well as China in general. And then finally, I'm going to provide what kind of returns you might expect from Tencent stock looking out into the long term. So let's get right into it, guys. So let's get right into the back of the napkin style valuation here. So this is just a quick and dirty valuation. So Tencent, they currently have a market cap of $375 billion. This is in US dollars. They have current cash and cash equivalents. You can see this on the balance sheet. They got $43.6 billion in cash and cash equivalents, and then $45.6 billion in long-term debt. So if you take the cash and minus the debt, you end up with negative $2 billion. So obviously this means that the business has more debt than they have cash. However, to me, this isn't too much of a big issue. Pretty much, Tencent are excellent capital allocators. If you look at their return on invested capital over the past decade, you'll see constant double-digit return on invested capital year after year. So the fact that they're a little bit leveraged here, it's not a concern, and in fact, it's probably a good thing because they're putting more capital to use. If we look at the enterprise value, because there is more debt than cash, we've got a enterprise value of $377 billion US dollars, and analysts have expected 2022 free cash flow of $20.2 billion. So if we get the enterprise value and divide it by this 2022 expected free cash flow, this gives us a current ratio of 18.7. And we must also keep in mind that Tencent has a big stock market investment portfolio, and currently it is $103.7 billion. That is the balance sheet value of their long-term investments. And obviously this portfolio has taken a bit of a hit this year in line with, markets around the world. So if we take this stock market portfolio here and minus it from the enterprise value, this gives us a price for the operating business of $273.3 billion. So if we take that enterprise value and divide it by the free cash flow, that gives us a ratio of 13.5. So, for a business like Tencent, something that is very high quality, run by a great management team, you could say, it's a fairly cheap multiple to pay. But of course, just like Alibaba, there are risks to investing into China and into Tencent. So let's go over some of the catastrophic risks. This includes the invalidation of the VIE structure. In this case, you would most likely lose 100% of your investment. However, it is very unlikely in my opinion. I'd put it at less than a 5% chance of happening, and the reason for this is if China was to ban the VIE structure or invalidate it in some way, this would mean that they've broken trust with all foreign investors. So in the future, Chinese businesses are going to struggle immensely to receive foreign capital into their businesses. That's going to hurt the business's growth, and it's going to pretty much just hurt, the Chinese economy as well. And as the great Charlie Munger would say, show me the incentive and I'll show you the outcome. So the next catastrophic risk that you have to keep in mind is that the donations to the common prosperity of the CCP could become out of control, and this would mean shareholders get very little of the profits that the business makes. And in my opinion, there's about a 10% chance of this happening. Again, I don't think it would be in their best interest to, almost destroy their most profitable businesses. Tencent is a crucial business for the Chinese economy. They pretty much rely on it. So in my opinion, it seems very unlikely that this would happen. And the same thing goes with unforeseen Chinese government regulations. I feel like most of the regulations that were going to happen have already happened. However, I can't, say with certainty that there won't be more regulations in the future. And I can't say with certainty that it won't significantly affect Tencent. So because of that, I've got to give it about a 10% chance of happening. And then, of course, China invading Taiwan. This could result in us foreign or Western investors from, we will probably lose ownership of our shares if such event happened and, there was a war between China and some of the Western countries. And I have this at about a 10% chance of happening. Perhaps this is too high. Maybe, less than 5% chance would be more appropriate here, given the facts that China have seen what happened to Russia with all the embargoes placed on them. Obviously, I doubt China wants embargoes from the West, as this would, it would be bad for everyone, including China. Now, we're going to talk about some of the minor risks. We do have competition risk. I mean, obviously, Tencent has a very strong moat. They don't have all that much competition when it comes to things like WeChat. However, they do have competition in, segments of their business such as cloud. And, they've got global competition when it comes to gaming, even though they are very dominant in gaming. So, obviously, competition is a given. As they grow bigger and bigger, their growth is going to slow. And slowed growth, more competition could lead to lower margins. However, they are pretty resilient business. But yeah, there's definitely going to be competition for certain segments of their business. So yeah, this is almost a certainty. I think there's a very strong likelihood that there will be further donations, but I don't think they're going to be deal breaking. So 70% chance of small donations that aren't going to significantly affect the profitability of this business or the profits that end up getting returned to shareholders. Now, there's also the risk of prolonged lockdowns, which would affect their advertising business. China does have the zero COVID policy at the moment. This policy is not sustainable, and I do expect with the upcoming election in China, once that is over, I'm guessing that they'll probably ease some of that zero COVID lockdown policy that they've got. It doesn't make much sense and it's hurting their economy. So I'm going to play this at a 50% chance. And then further regulations to the domestic game business. I think the worst of the regulations with the domestic game business are now behind us. So I would put it at a 50% chance of, further regulations. It's really hard to tell with these things. Like, you might as well flip a coin because, look, I'm not the Chinese government and, I'm definitely not an expert on the Chinese government. I know a little bit, but I'm not an expert here. So what am I thinking? Well, very similar to Alibaba. I think there's about a 5% chance to lose all my money. This would happen because the VIE structure gets invalidated, or because there's a war between China and the US. And then, of course, the 10% chance I lose 50% or more of my investment. This would be because, it might be a combination of some of those minor risks that we have, or maybe some of the catastrophic risks such as donations or unforeseen government regulation. So if things go right, here's my bear case. So we've got 12.5% free cash flow growth from a base of 2021's numbers of $22.2 billion, a 2026 PE of 16, and 15% portfolio growth. That gives us an annual return of 15% going out over the next 5 years. And then in the base case, we're assuming 15% growth from a base of $22.2 billion, a PE in 2026 of 19.5. So this assumes that some of the regulatory sort of clouds surrounding the business ease up, and we get 15% portfolio growth. That gives us a annual compounded growth rate of 19%. Then of course in the bull case here, a bit more aggressive, 17.5% growth, PE of 22 in 2026, and then 15% portfolio growth. That would give us an annual compounded growth rate of 26% per year. So at the moment, I'm 85% sure either the bear case, the base case, or the bull case will play out, and then 15%, sure that things might go wrong. 5% chance to lose all my money, 10% chance I lose 50% or more. I think this investment just requires patience and just monitoring some of the risks that we discussed, particularly those catastrophic risks. So guys, I hope you enjoyed this video. Thanks for watching. Make sure you like and subscribe, and I'll catch you in the next one.